business with a 17% stake in Monster Beverage. The $2 billion deal tightens the bond between the two companies. They will share marketing, production, as well as distribution. Bill Chappell joins us now. He is an analyst at SunTrust Robinson Humphrey. Bill, you have a buy on both these stocks. Who do you think this deal is better for, Coke or Monster?
The deal's better for Monster, just from the size, the scale, and just what it does in the near term. When you look at it, it really transforms markets. I mean, Monster's profitability overseas, where they've been barely making money, and kind of validates their market in the U.S. by having Coke make this investment and kind of invest behind the energy drink category for the long term. So I think they're the big winner, but both really will see a lot of benefits over the next few years out of this.
I was going to say, Bill, because Coke has a lot of problems on its own, right? I mean, it can't diversify into snacks in the same way that Pepsi has. And at the end of the day, people are drinking less soft drinks. So it seems, what kind of desperation can we learn about this from Coke?
Yeah, I think you can maybe look at it the other way. If Coke was fully desperate, if they really needed something, they probably would have bought the whole thing. I mean, $13 billion acquisition price, Coke can do that. They do that in free cash flow in a given quarter. I think it shows more they want a put option, that they see the energy market here to stay, especially in the U.S., for a long period of time. And having a strong partnership, it also, for Coke, I think, they're getting rid of some of their energy brands and giving them to Monster that haven't been growing overseas, helps them focus a little bit better on their core brand, Coca-Cola, Coke Zero, Diet Coke, that need some extra help.
Bill, is it fair to describe this as a capitulation of sorts, that Coke couldn't figure the energy drinks business out?
Yeah, I mean, I don't know if you'd say capitulation, just because it was really never a non-starter. I mean, even their brands like NOS and Full Throttle, they were good brands in certain markets, and Burn and Relentless some overseas, but they were never that big. I mean, even those brands in the U.S. were less than 10% total share. They've always partnered with Monster. I think it was kind of a realization that the energy drink, that Monster wasn't going away, and it was just not a good use of their time and resources to bet on a bunch of small horses when they could bet on this big horse.
But surely Coca-Cola, with all of its marketing and advertising muscle, could have made something of those lesser brands if it wanted to, or not. I clearly don't understand the energy drinks business well enough to know what the magic of Monster is.
Well, and I think that's, and I'm not, unfortunately, in the target demographic either. But I think the issue here is it's millennials. If you think of it, 20 years ago, 30 years ago, after you played basketball, you were grabbing a Coke. Today, after the 20-year-old plays basketball, they're grabbing a Monster. And that's a brand you can't, no matter how many dollars, whatever, you can't make an authentic brand from just overnight. And that's what Monster's done over the past decade, and that's what Coke is now investing in.
But with that comes some regulatory risks, right? There have been concerns that are these energy drinks somehow linked to questionable deaths. There are investigations going on in there. Is Coke taking on some needless risk by diversifying here?
Well, I think, and they haven't said this, but I think that's part of the reason why it's structured this way. I mean, they could have bought the whole thing, but by keeping it as the standalone company where they're just a partner and a 15-20% owner, that lets them keep that at bay. But understand the big part of this transaction is Coke taking total distribution rights in the U.S. Right now they distribute 50% of Monster's business in the U.S. They'll take over, so they're doubling down on the U.S. where there's been most of the headline risk, most of the litigation risk. Clearly, Coke doesn't see that as a long-term issue.
What does that do to Coke's bottom line then, that full distribution?
For their core business, it will, they haven't quantified. It will help it some. Obviously, it would help it a lot more if they bought the whole thing. The real interesting part is, as you may know, Coke eventually is going to spin out or do something with its bottling business. They bought that 4 or 5 years ago in the U.S. to kind of fix it, and sometime in the next 2-3 years they'll spin that out. This gives that bottling business 100% rights to Monster, so it gives it a kind of a shot in the arm. So I think it actually enhances kind of the spin-out value, and which it enhances the total Coke worth.
Walk this a little bit down the road for us. Does not only are they working on distribution in the U.S., but they're also building out Monster internationally, right? Does Coke eventually need a complete buyout to make that international expansion worth the money?
No, I mean, again, it's $2 billion is not much for them. Does Coke want to do this down the road? Again, I think it's a put option. But internationally, if you look at Monster, they have, in the U.S., probably a 35% market share. Internationally, it ranges from 0 or barely 1% to maybe as high as 20. And by partnering with Coke, by being their only energy drink in their bag, it's going to supercharge that. By Coke using the distribution, the manufacturing, the scale, it's going to be a lot more profitable, a lot faster. But there's some countries they talked about on a call this morning. Monster has no presence in China today.
Right.
It barely has a presence in India today, so that's going to change pretty quickly.
And you said it, supercharged. The puns are plenty with this investment in Monster Beverage. Thanks so much, Bill Chappell of SunTrust.
When we come back, the price of airline tickets heading in the same direction as the aircraft, straight up.